This is Back Roads of Illinois server to farmers and ranchers in central Illinois in the Midwest. I am Cesar Delgado. This is Cattle Talk with Charley Martinez from the University of Tennessee and Dave Weber from Terrain Ag. Hello to KDHNL from West Texas and New Mexico. With Nancy and Todd Wellen in West Texas, this is Back Roads of Illinois server to farmers and ranchers in central Illinois in the Midwest. This is Cattle Talk with Charley Martinez from the University of Tennessee and Dave Weber from Terrain Ag. Hi, Charley and David. How are you guys?
I'm doing good. Happy
Doing
to be
great.
back with you.
Doing great. Thanks for having us on.
Charley, let's start with our conversation about the cattle markets. JBS is having a strike in Colorado. What is the fundamentals trends in the feeder markets for right now?
Yeah, I think whenever we think about that strike in itself and we think about the supply chain and how it's laid out, the strike itself, I think, is going to have more of a short run impact at the fed cattle level. And then as you think through the short term impact, which could be a couple of weeks, could be a couple of days, it depends on the strike itself. But the longer it goes, the more impact it can have on feeder cattle markets. Specifically, if we just think about fundamentals of demand and supply, packing plant not operating or company not operating, that decreases demand. Demand decrease, we have price decrease that works its way through to the feeder cattle side, and I think short run impacts. It looks like the feeder cattle contracts. If you look at the futures boards. Coming into at the end of last week, they were taking a downturn, and then throughout the first couple of days of this week, it looked like it was kind of correcting itself somewhat. But today, as we sit here and record, Dave and I were talking just before we started hitting recording that it's kind of a mess right now, and contracts across the board are all starting to suffer a little bit. So much so that all the gains that they've got this week seem to be disappearing, minute by minute.
Dave, you got a front row seat of it. What is your position on the technicals on the fats?
Think you're on mute, Dave.
I was sorry. Yeah, the strike and the ongoing impacts seem to be kind of a slow moving grind. With the contract having been expired back in last July, there's been risk of this coming. I think the feed yards that supply the plant have been kind of on edge and alert to the coming events. The cattle that were supposed to be slaughtered there last week, we didn't kill anything last week in the plant before the strike even started, have been reallocated to other JBS facilities. I would expect that Grand Island and the Cactus, Texas Dumas plant um, would have taken the bulk of those cattle. The live cash trade in Colorado isn't large, so that means those are all contracted, committed cattle. Uh, so JBS was kind of obligated to take them. I imagine there's some freight allowance, some kinds of those things going on to get those cattle moved. Um, the challenge probably becomes more of a Texas Nebraska problem because now those cattle are filling in what would have been cash trade into those other JBS facilities, and then they're probably pushing some cash trade into some other plants as well. If you look at southeast Colorado, maybe some cattle going into Finney County and Dodge City, those kind of places, maybe Liberal as well. So we're going to start to see those cattle supplies probably bolster Texas maybe to an advantage, get their numbers filled up. I think as we look at the total inventory, near-term effects are probably more psychological, long-term worries about the resizing of packing capacity, which we've been thinking is going to be coming. I mean, Tyson did their part on the closure of Lexington, single shift in Amarillo. We're still over capacity compared to the cattle numbers. And until we see this drought break and um, the growth in beef replacement heifers and cow calf operation numbers, we probably continue to see a grindingly slow decline in available feeder cattle and calf supplies, which bolsters prices.
How is the Packers bids for this weekday? W.
Um, it's been kind of slow. Um, Let me look here. I think I saw some action on Fed Cattle Exchange this morning. High bid was 235. Uh, Feeders asking 237, 238. I'd expect we'd be probably in that mid 230s kind of territory as long as we don't bleed off too much more of the front month futures here. I would expect we'd trade in the low two, probably have some $10 average retail beef prices by, I would say, mid to late summer, early fall sometime.
How about you, Charley? Do you have some concerns about economic growth?
I think, kind of tailing with what Dave said, I kind of think he did a good job of just highlighting some of the more broad macro movers that impact one, the demand side of things for beef. But if we look at just, any industry, if you look around, I think the uncertainty around a lot of things is one of the things that, regardless if you're in agriculture or not, is impacting with the decisions that you're making today throughout the rest of the year. One thing we've learned over the last year is you can have fundamentals to a T and know everything that's going to happen fundamentally, but then a news outbreak or a geopolitical movement can alter a lot of things pretty rapidly. And, even to the point of a random morning to an afternoon can change a lot of things. I think when the question is, do I have any concerns? I don't think I have a quote unquote a concern, but it's more of, what can happen tomorrow or what can happen next week that we don't foresee happening right now. What is the unknown unknowns that can impact us? And so I think the one things that we do know, yesterday rates stayed where they were going to be because of what's been happening with the Iran conflict and inflation, kind of be still on the tip of the tongue of a worry out of the Fed Reserve. So, if we want to look at it from that perspective, it's a signal that inflation is still not going down because of things that are out of the control of a lot of folks, in particular geopolitical conflict. So, I think my concern more about what can happen in not only the next couple of months, but the rest of this year and even next year is just the uncertainty of random events happening that can cause disturbances throughout every market that you're looking at, whether it is agriculture or not agriculture.
I want you guys. Could you give me your final thoughts about the economy in general? Start with D. W.
But I think, economy wise, the change in oil prices is probably the leading factor we've got to worry about here, and what this sets off in terms of the cascading effects of changes in the cost structure of transportation industries. It's gonna filter through in a lot of um, quiet ways into the price structure and drive CPI. And I think that inflation pressure that comes with that um, probably creates some big challenges for the Fed. We saw this week that they decided not to move interest rates. If it turns into an employment problem, they've got to spur on the economy a little bit. When you look at the changes in inflationary pressure, their jobs to try and offset that, it kind of leaves me thinking they're probably in more neutral territory here for a while. Kind of waiting to see how this plays out.
Thanks you for your opportunity for today.
Thank you.
This is Charlie Martinez and Dave Weber on the Cattle Talk on Today.